Welcome back. 25 seconds, and then we'll get the first pre-open rates based on market internals and the kind of global, setup we are staring at. It appears to me that Indian markets clearly will do nothing special before 19th of March because a lot of macro talk will now dominate and dictate Indian markets. The good news here is that global markets on a relative basis are still looking strong. Foreign institutional investors, they're still buyers in the cash market. The only data which is puzzling me is the fact that why foreign institutional investors have turned rampant buyers in the options market. That really could be a lead indicator that either they are hedging or they are betting on a very strong, very strong market move in next coming days or in the near term. In terms of first rates, we've got Punjab National Bank, which is at 850, Tata Motors 319, 314 now, Infosys Technologies 2918, TCS down by about a rupee. Infosys is holding on. Tata Steel honestly is not going anywhere. And what about DLF, which has been a marked outperformer at least for this year? DLF this year is up more than 20%. It touched a new high yesterday, and today it is at 283 rupees. Aisha?
I want to see the early trends for the banking pack, considering they are the ones which led the market down yesterday. So let's see what some of these banking names are up to. The likes of ICICI Bank, Axis, SBI just about marginally in the green at 210 thereabouts. Well, the market is a little soft, and sure enough, when the SGX Nifty was already indicating some weakness and standing at 5915 levels, we had to start sub 5900. So there we are, 5890 on the Nifty, and that is the pre-open rate indication. Let's bring in Manisha then and chat about what the currency is up to though. 5409 on opening bell. Manisha.
Well, thank you for that, Aisha. It's the fourth straight day of gains coming in for the Indian rupee. We saw 0.5% of a run-up yesterday, and 1/10% gains is how the rupee has opened shop today as well. Well, you have seen the fund inflows, the government stake sales, and also the strong IIP numbers, all of that really supporting the rupee there. But apart from that, the retail inflation has been on the higher side, and scope of an interest rate in the coming RBI policy is something that the markets really are discounting at this point in time. But it is good going in the international markets as well. You have seen most Asian currencies gain up, and that also seems to be supporting. We have spoken to Corporation Bank today, and they are expecting a range between 53.80 to 54.40 on the higher side for the day today.
Manisha, thanks a lot for that. Dealing with Buzz, and for that, Ajay is standing by. Let's say hello to him. Morning, Ajay.
Good morning, Nikhil. Different mid-cap real estate counters, select of them have been come on the big HNI's radar. Puravankara projects, for one, is raising around 500 crores to retire part of its debt, so it will be selling around the 4.5 crore shares. Now look at the bankers, JP Morgan, Kotak and Axis Capital are the bankers to the issue. We understand that a lot of firm commitment or good positive vibes have come from funds like JP Morgan, Reliance Mutual Fund, HSB Global for this particular share sale. So after the debt goes down, the company will of course have norms to cater to also the shareholding norms for the promoter, along with debt coming down. So watch out for this particular stock. It has recently made a high of around 110, 115. Dealers expect that post this transaction again that kind of move can come, and of course the rate cut possibility is making a case for mid-cap real estate counters where promoters are cutting stake quite aggressively. So watch out for Puravankara. Second one is Tata Motors, disastrous set of February sales as far as JLR is concerned. But most of the institutional analysts are saying that it does not merit more than 2.5–3% cut. Beyond that, it becomes a buy, mainly because the Chinese New Year took a hit. So it is a one-off this time round. Watch out for that one. Last one, of course, Titan. It is in a downtrend. Dealers believe that the downtrend may continue for a little longer. Also, there is buzz on the street, unconfirmed, that the KYC norms for buying large-scale gold may get stronger, and some announcement may come soon. So the environment remains very negative for Titan as well.
Gold prices are down, so if gold prices go down further, that automatically will have an impact on Titan's top line. If the top line goes down, obviously it will be a negative news for the bottom line as well. Titan always has been a very, very expensive stock. Even after the correction, according to the Bloomberg estimates, based on FY14 estimates, it is still trading at a P multiple of 30+. At a time when markets in general are not hiding in very expensive stocks, names like HUL, ITC, Jubilant, Foodworks. Maybe Titan could underperform in the near term if gold prices they correct further. Tirthankar, would you agree with my assessment on Titan?
I would think so, yes. I mean, gold demand in India has come down over 20% on a YOY basis, and the government's push to limit gold demand, particularly in the light of what we are seeing on the current account, is only likely to get stronger. So, and therefore we do not expect, any kind of positive surprise on Titan's revenues at this point, really. So, yeah, point taken.
Tirthankar, what happens to the mid-caps? Because we've seen acute pain building into the mid-cap universe. In bits and bounds, we've seen some rallies coming in, one-off days for, the real estate pack or some of the infrastructure names. But besides that, does it seem like this could just be the start of mid-cap pain and perhaps there's more downside to go, per se, on the index basis?
I would agree with you, Aisha. Basically, mid-caps have seen prolonged phases where we've seen days where select mid-caps have fallen more than 20-odd%, and we would not rule out such more of these days coming into the future. From a top-down perspective, markets are, in a consolidation phase. People are looking into quality. People are, especially foreign investors, they do not really go beyond the top 150-odd stocks. So this is hardly the time, with the kind of macro overhang we have, to delve into mid-caps. Choices would be very, very specific, if at all, for the overall sector. In terms of capital flows also, beyond what we are seeing from FIIs, which is restricted, and it particularly excludes mid-caps. From the domestic institutions, we believe government equity supply over the next 6 months, I think for FY14 the overall number of about 55,000 crores is going to be front-ended, and that also translates into a fair amount of selling pressure on mid-caps and tier 2 stocks, in our opinion, because unless equity inflows into mutual funds and insurance really picks up over the next 6 months, and we don't see that happening, many of the domestic institutions, in order to participate in the flows, in the supply from the government, would have to get out of their positions on mid caps, frankly. And lastly, you might continue seeing promoter pain, pledging pain, brokers actually selling off pledge shares, and which could lead to isolated incidents where selected mid caps could see an enormous amount of pain. So overall, not the time to be in mid caps at this point, really.
Tirthankar, domestic institutional investors have been rampant sellers in the month of March. If I simply add what domestic institutional investors have done in last 3 days, they've been net sellers of to the tune of about 2,000 crore. That's little less than $500 million. What is your understanding? Do you think the selling will continue till 31st of March?
See, I guess the initial part of the year saw domestic institutional sell-in. A large part of the DII figure was LIC and a couple of large insurers who saw meaningful redemptions. January, February, March is generally a good period for the insurance sector. Overall, over half the money from first year premium essentially comes in the fourth quarter. This quarter has not been that well, frankly, and we have seen redemptions come in. They had petered out over the last 2 weeks, but we've seen a resumption of that happening over the next 2 days. We believe that until 19th March, that's one macro date, this is likely going to continue, and overall around 31st also, in terms of domestic mutual funds trying to beat up their numbers, you might see some amount of redemption continue happening.
Tirthankar, really appreciate your time and thank you for your insights. Let's connect with Samir Arora, fund manager with Helios Capital, who joins us all the way from Singapore. Samir, good morning. Thank you for joining us. Samir, whichever way I cut and dissect, the macros for Indian markets are looking slightly challenging. Inflation is up, growth is down, and crude prices are stubborn.
Cannot hear you.
Hi, Samir, this is Nikunj from the Mumbai studio. Is my voice reaching you?
Actually, in between there was sort of a gap. I could hear most of it, and then suddenly there was a pause.
Do you want me to ask the question again?
Yeah, I'm just getting the last part. You said that the economics are bad and therefore...
No, what I'm trying to gather from you, Samir, is that whichever way I cut and dissect the macro picture, looks like we are in a spot of bother. Inflation is high, earnings are slowing down, and we have a sub 5% print on the GDP. What's going on, what's happening, and what could happen?
Well, it is quite bad, and I think this quarter will be even worse because there's been absolute stopping of government expenditure. You know, but in October last year, maybe we were running an annualized deficit of 6%, which has suddenly been compressed in one quarter. And all the decisions that the government has taken in terms of trying to help various sectors have not immediately resulted in anybody getting new business or any capex being started. So this currently market it's quite difficult right now because it's sort of a balance between very poor, I think, this quarter's numbers, and on a macro, this big attempt to reduce fiscal deficit and help start the investment cycle. And the budget was sort of okay. It was good in some parts where the only thing you could say was that the government or finance minister's sort of commitment to 4.8% came through quite strongly, and there seems to be a few buffers here and there, at least in terms of, you know, increasing things like Sutti share sales and stuff like that. And again, but it was not so good as to recharge everybody and bring in new investors, bring in new domestic retail investors and things like that. So we also been confused about it. We have reduced our net exposure, and we are long some things and short some things. But broadly, it was sort of a budget which I did not think will lead to a 5% rally or whatever 4% that happened last few days. That was surprising for me too.
Okay, Samir, hold on to that thought. Lots more to chat about with you. Well, let me just recap the trading ideas coming in this morning. 3.5 minutes to go before we kickstart trade for this Wednesday morning. Ashwini Gujral, intraday buy on ITC, Ranbaxy, Biocon, a sell on Shriram Transport, BHEL as well as CESC. Sandeep Agle, buy call on Jubilant Foodworks, and that's precisely the only solitary buy call coming in. He's got a sell on BHEL, Bharti as well as Bajaj Auto. Deepak Moni, a solitary buy call on Union Bank, recommends shorting Havells as well as NTPC. Nikunj?
Let's nail it down to one idea each from our technical experts. Ashwini, your number one idea for the day.
I think I will go with the ITC. Chances are, you know, whatever slowdown we have, they'll be able to increase their prices.
Well, they've already increased their prices yesterday. That's what we reported. Sandeep Agle, what is your number one idea?
Nikunj, I would go with the sell in Bharti.
What is the broader range for the Nifty according to you, Ashwini, now?
Well, the broad range is 58.50 on the downside and 59.50, 59.70 on the upside.
Alright, gentlemen, stay with us. About 2 minutes left, and then we'll get the first pre-open rates. Let me just very quickly bring our viewers up to speed with global markets. The good news here is that US equities are up for 8 days on the trot now. Can you believe that? 8 days on the trot now. But the bad news here is that if I map how US equities have moved in last 2 or 3 days, the pace of appreciation surely has come down. So maybe US equities or other developed market equities, they are now marking time. If I look at market internals for Indian markets, it is evident that benchmark indices are now clearly settling in a range, and based on the FI activity and local market participation or what local traders have done, it is evident that bulk of the short covering is now behind us. Post-budget, well, that post-budget appreciation is over. So the good news here is that post-budget, markets were staring at a breakdown trade. That trade has failed. But in the run-up to the credit policy, for sure for next 2 or 3 days, a lot of macro talk will dictate and will dominate Indian markets. So the script of how Indian markets will now move for next 10-15 days would largely be a function of what Reserve Bank of India does and the kind of macro environment we really could be staring at. A lot of market men suddenly are focusing on the macro picture or the big picture, because earnings or the Q4 earnings are at least a good 3 to 4 weeks away. The big number which honestly has puzzled me yesterday and which is puzzling me today is what foreign institutional investors are doing in the options market. In 2 trading sessions, foreign institutional investors have been rampant buyers to the tune of about $1 billion plus in the options market. And typically when such activity picks up in the options market, it just tells you either foreign institutional investors are hedging their portfolio or they are betting on a probability of a very strong move on the downside or on the upside. But yes, that's a fact number which we cannot ignore. In terms of a stock, well, it has to be Tata Motors. JLR sales numbers came yesterday after the bell, and those numbers, because of China, they were way below estimates. Where is Tata Motors? 304. Even though numbers were poor, most of the brokerages are of the view that Tata Motors is still an attractive stock to own, because the February dispatch numbers in China were poor because of the Chinese New Year, and that was a one-off event, and soon those numbers will recover. So it's not a bad start for Tata Motors. Let's look at DLF now. DLF this year has appreciated by a good solid 20% plus. Today DLF is not off to a great start, but markets are also not off to a great start. Nifty has plunged below 5900. It's a 100-point cut for the Sensex. In terms of mid-cap stocks, well, PC Jeweler is down, Unitech is down, there is some selling in DLF now, there is some selling in HDIL, and high beta, well, it's not a great start for any of the high beta stocks. ADAG stocks are down, real estate, I've told you that nothing is happening there, IT also is languishing. So whichever way I cut and dissect the initial rates, there is definitely a lot of red on the screen.
Oh yes, that it sure is. And it's no better really, Nikunj, when it comes to the broader markets too. Couple of stocks in focus. You've already talked about Tata Motors. Watch out for that one, even though most dealers do suggest or recommend buying the stock on dips. Puravankara, they're looking to raise about 500 crore rupees by selling 4.5 crore shares in the market. So Puravankara will just come up for your screens. And Titan, because there should be some further weakness as well coming in this stock. Stronger KYC norms on gold may now be introduced, and that isn't quite going down well with the stock price. It's currently lower by about 1.25%. But of course, the big cue is going to be on the 19th with the RBI's policy decision. Samini, what is your expectation from the RBI this time around? And now that question marks are being raised about whether or not the RBI is or is not going to cut down rates after the IIP and inflation trajectory yesterday, does it seem like even if the RBI were to oblige, it's already in the price?
Well, till yesterday morning, I was maybe 100% sure that there will be a 25 basis point cut. And even now, I feel that there may be a cut, but the language accompanying it may still be so, hawkish and harsh, that the markets will not really look at it and get away that as if the easing cycle has picked up or strongly or started. So I think that event in itself, unless there is no cut at all, that would be a big disappointment. But most probably what I think will happen is that there will be a cut, but accompanied by language which says that this is it, and now we see implementation, and now we see other things, and therefore, after a few hours, people will again forget that. But at least it won't be taken negatively, I hope. Even if the language is harsh, but as long as there is a cut. And I think the cut will be there because at the end of the day, the government has been able to present a fiscal deficit target, which, in itself, the target is very impressive, considering that in September of 2012, we were staring at 6%. And let us say that the RBI thinks that 4.8 is not possible, that will be 5. It still is a 100 basis point cut from what was, expected less than 4-5 months ago for next year. And for this year, and therefore for next year, 100 basis point cut in a year in fiscal deficit is itself quite, credible in the face of elections coming up and all that. And therefore, I think RBI will do one cut, but the language may not cheer us up.
Samir, we start a new financial year very soon. So what do you mind will dictate and dominate the financial year FY14?
Actually, that is going to be the test why, after the budget, I am not turning sort of more bullish or even maintaining my bullishness of that time. Because I think that the markets have to take a call that whether they are really so long-term in terms of their outlook, that they will ignore, I think, a very bad result season that will come up in April. and a big picture of government starting its spending and things like that. What will be that trade-off and how far will we go? That will show also our maturity and our sort of horizon. But right now I think that the results will be quite bad, and this quarter's all numbers will be bad. And so I feel that okay, in some sense markets discount ahead of time, but it's a tough phase. So we are not overly negative, but we are not bullish anymore. Our net exposure we have reduced to around 50%. So it's sort of half in, half not in kind of a position right now.
So in terms of what you long on, what you short on, give me a flavor of that.
Well, the thing is that what we've learned in the last 2-3 months is that there is no point in attempting to buy new things. We all tried our infra and cap goods and real estate and all that at the end of October, November. We had it less, about 7-8%, but we tried new things. There is no reason to do that. There is no market sort of reward for that. And if something goes wrong, you lose 30-40% or 20%. And therefore, we have basically gone back to what we anyway always owned, which is the private banks and consumer and a little bit of pharma, a little bit of auto ancillary that we always had, but not none of the new. I mean, none of the new, not new sectors, but sort of a shift to sort of different sectors. We basically blown them all off, and some of them we are short. Some of them we think are terminal situations now because the debt is so high. And the equity markets will not oblige them, and even if they do, if you have 50,000 crore debt and you raise 500 crores, it doesn't change anything in life. It just is like a few days of interest that you recover from selling stock. There doesn't seem to be easy solution for some of these guys and the bankers that have lent to these guys. So that is where we are bearish.
Samir, when you say consumer, if you could give us some more color in terms of what companies you'd be talking about, but the other point really being, after the kind of slowdown concerns that we've seen, a bad third quarter, why would you pick a sector like consumer?
Well, we are not picking a sector like consumer. We have those stocks and we still have them. I can give you one name which I have for maybe 1.5 years, Bata for example. Now we have it, maybe it'll slow down a little bit, maybe not. It's not so much dependent on sort of a one class of consumer. It's sort of a big picture play on, the fact that it's a highly penetrated sector, but there is no private sector or any competitor. There must be whatever 3-4 times bigger than the next guy, and you sort of a slow penetration increase of people buying, instead of buying Hawaii chappals and fleets, they buy leather one day and things like that. So this is a very big picture. We own Page for maybe 2-3 years. And we also call consumer, we also call media nowadays as consumer, just to say that we have a lot of consumer. But in a sense it is. So that is what it is. Not that we are buying new consumer stocks, but what we are saying is we are not buying any more any of these infra, real estate, cap good kind of thing, because they may have a sentiment shift, but now I believe that in reality government can change their sentiment, but a real project to them will not come in less than 1.5-2 years. I don't think it will come for the whole of this year. Whatever you may do, of course, there is one angle that the government, that is PSUs may increase their capex. Okay, good luck, doesn't matter. Who knows which guy will win those orders anyway, and there will be one in serious competition because their orders are far few, and therefore there will be more competition, and somebody may get one of these orders, a company that we could have owned but don't own. But in general, this year we are basically playing the macro theme that there will be a fiscal deficit reduction, but that what accompanies it, last year what accompanied it was a serious compression in government spending. This year you could say that government is spending also, and there will be a stimulus related to election spending by political parties. So all that, if it turns into anything, will initially be still consumer related and advertising related thing rather than somebody's capex going up.
Samir, why auto ancillaries though?
Again, we have them forever. We have Bosch for maybe 2-3 years. So we have them. There's nothing new that we have done, I must say. All we're saying is that since we sort of blew away all these new sectors, we added to some of these names because their weightages have become less or more, or because this extra money was raised. But it's nothing new that we are discovering in any of these, and that also is two names basically.
Samir, in the near term, are you aligning with exporters? When I say exporters, pharmaceuticals, IT, because if macros are bad, that will have a negative impact on the currency.
Well, that is true that, although we have not bought a new pharma, but we have about 10-12% in pharma. IT, yes, we have added. We have actually this time bought a US company rather than Indian company. We bought Accenture. But the idea is that, yes, that there will be a benefit to exporters and to anybody not directly associated with the Indian investment cycle. You could say that it is bottoming out and all that, I understand. But my feeling is that I am not really going to buy a stock on a big picture, which in 2015-16 will get some order of some, from somebody or the other. I like visibility, that's why I don't buy commodity companies. Otherwise you could buy them on the same logic that cost, they are cost competitive. So what if the market price is less? One day supply demand dynamics will convert, will lead to prices being higher. I don't think like that. I don't like that. So for me, it is that it should be easy to understand where the revenue growth and profit growth is coming from. We basically, in some sense, want to work at a bottom-up level rather than top-down level. And today, all these things are top-down. These sectors. For example, for me, I don't relate to the fact that the Supreme Court said that you can start a road construction without getting approval from whatever forest. Okay, I can see it, but what does it mean? Should I start running around buying road builders and stocks go up 2%? I don't understand all those things, or they don't sync with me, so I don't do those kind of things.
Samir, you have a large exposure to Mahindra Satyam or Tech Mahindra. That stock has done rather well for you. It's up about 80% in last 1 year. It is still the cheapest large cap IT stock to own. Are you still hot on Tech Mahindra stock Mahindra Satyam?
Well, we have it, yes. We haven't sold any during this whole period, yeah. And we haven't bought also, so it's there, yes.
Right. What I'm trying to gather from is that it is still a cheap stock. The P multiple is not 14-15 times. It is almost 10-11 times. Do you see a scope of P expansion for Mahindra Satyam?
See, from my point of view, what I want to say was that if I have not added to something in the last 4 or 5 months or even 6 months and sometimes for 2 years, to me, they are sort of my serial compounders, which for the moment I have. Right now, all our energy is spent in finding shorts. It is not spent so much in trying to find another serial compounder, because, those are, in a sense, we have some, and maybe there are a few which we haven't got and we could have bought, and maybe if we do too much effort, we'll find a few. But for us, it's a mindset change, because from October to Feb, we were over bullish in some sense, which helped in the last year. Last 3-4 months of last year, basically we were as high as about 74-75% net exposure, which is now down to 50, and on the margin I would reduce it rather than increase it, although for the moment it's okay, plus minus. But every day if you ask us what we do, we short rather than we buy long. So Mahindra Satyam is good, but today if you ask me, is it my biggest trade, I would have forgotten about it also in some sense. Because it's doing its job and it's moving in line with that. So it is one of our biggest holding, but that still doesn't mean that we say to you today, right now, buy it, because it's some, great new thing that we have discovered in it.
Samir, how are you approaching the metals though? That's one space we haven't quite talked about. There is some improvement in global demand. Globally as well, things are bouncing back and metals are picking up.
We don't do commodity stocks on the long side. Right now we are shorting a few. Yesterday we shorted because of, again, these mining related issues coming up, where, first of all, for 2 months you will not know, because I think the next hearing is end of April. But Supreme Court has said clearly that all these mines will be cancelled, and so you know which ones will be hit negatively, and we can all say they are discounted or not discounted, but their investments are stuck. You see, the mining majors themselves are saying that we will not invest in India for the next 3 years. One of the biggest guys in India said that. Why do you think that FII should come to India and buy stocks of these companies where the promoter says I will not invest in India? So there is no need to be bullish on these if the management themselves feel that the Indian investment scenario is very bad. So we are not going to be bullish more than the promoter is bullish. Our job is to see whether the promoter is bullish and say, no, he's being overly, aggressive because it is his own company. If that fellow says, I will never invest in India, we are not going to waste our time saying that we will invest even if you don't. So.
Is oil and gas as well a short? Because things seems to be moving somewhere in bits and starts. For example, Reliance has been getting some clearances from the Defence Ministry as well as DG Edge.
I'm not talking about Reliance because they are quite aggressive in India plans. We don't have a position either in Reliance.
Samir, but some would argue that metal stocks have already corrected. Most of the large metal stocks are trading below their book. Hindalco, Tata Steel, all of them are down more than 30-40%. Is the margin of safety still strong in going short in metals?
Well, we are only short in one name and also related to the specific event of yesterday only, which I said I did only yesterday. If it doesn't work, it doesn't work. But in general, because we don't buy them on the long side at all, whatever be their valuations, we can only be tempted to short them once in a while. Otherwise, we are basically not in these either way. So it doesn't matter to us in some sense if we get, because our individual shorts per head are only 2 to 2.5% per name. So they have to go up a lot to pain us. But mostly we have seen that they work. This margin of safety thing works when the world is turning and the flows coming in. Right now, you've seen that when any stock hits the headlines, you just make the stocks get hit 5-10%, whether they were cheap, not cheap, that comes after that. The news, it is very difficult for the world to negotiate news of this kind. That the Supreme Court has come against the company, cancelled it, there was some issue of government helping it or some politician helping it. You think anybody cares at that point of time about what its valuation are? You tell me, look at all the real estate companies. Once they come in any scam, they even come in somebody buying leverage position. It doesn't even have a scam. It is that somebody had pledged shares. That is as innocent as it could be in terms of fundamental, but nobody cares because the market is right now focusing on some 40-50 stocks that are going up. The rest of the market, nobody is interested. That is the reality right now. That is why it is such a tough market. And therefore, if you see even this year, the average market is down much more than the index is down.
Right.
So maybe 5 stocks are up, and they are up. Some of them are, these tech stocks are up. Right. One DLF is up, and 1 or 2 these oil and gas companies.
Yeah, it's a very, very polarized market indeed. Samir, really appreciate your time and thank you for joining us. 100 points down for the Sensex, 40 points down for the Nifty. Ashwini, it's not a good start. We're not staring at a very healthy market.
Well, good and bad is a relative term. And I think for the moment the market has given a sell signal. As you would recall that I take gap up and gap downs fairly seriously, and today we have got our gap down. So long positions are now out, and we have taken short positions on the market. Stop loss is closer to 59.40, 59.50, and now let's see if we get a trend day here, because the way these gap ups and gap downs work is that post a 4 or 5 day up move from the lows, once you get a gap down, that means somebody has come and sold in some sort of quantity. So that's an indication where the big money is moving. So having said that, I think on individual stocks it's best to get a little defensive. Can I come back to you on individual because my computer seems to be messed up?
Sure. Not a problem. Nifty on your screen, 38 points down for the Nifty and 119 points down for the Sensex. Let's shift gears from markets to policy and macro focus. Jyotiraditya Scindia, Power Minister of India, joins us from New Delhi now. Mr. Scindia, good morning. Thank you for joining us. Mr. Scindia, the financial restructuring package, how many states are on board, and are you confident that government will be able to meet the 31st March deadline?
Well, the FRP package is pretty much finalized. We have 8 states on board. What I'm waiting for is a green signal from the Ministry of Finance for the transitional financing mechanism. Once that's in place, we're all systems go.
The lenders and power companies are of the opinion that the new bidding norms for forthcoming UMPPs are not viable. They prefer the earlier document. Where does the dialogue stand on that topic?
Well, we had a very detailed discussion on SBD Case 2 with the advisory group. It's not the case that the earlier document is better than the current document. There are issues that need to be cleared on both formats, whether you follow the earlier BOO model or whether you follow the current DBFOT model. I am right now in consultations on this Case 2 SBD, but let me also say this, that the current issue really is SBD Case 1. SBD Case 2 is much for the future, but we are still working on SBD Case 2, which was ready to go to EGOM, but I've had these discussions. I will consult my officials and then chart the way forward.
Mr. Sindha, the cabinet has given a go-ahead for pooling of imported domestic coal prices. How soon will the Ministries of Coal and Power finalize the policy for that? Is it unlikely that it is going to happen this fiscal?
Well, this fiscal is almost over in 10 days. So, another 15 days. What's very clear is that you have to come out with a rational and a very clearly enunciated policy. And I think there's a lot of groundwork that needs to be done to be able to come up with a policy that makes a lot of sense, considering all the boundary parameters that we need to keep in mind. And therefore, I have mandated CEA to actually do a bottom-up analysis, unit by unit, plant by plant, in terms of seeing what is possible, keeping into account geographic issues, keeping into account equipment and plant issues in terms of blending capability, keeping into account certain plants that would want to be a part of this, certain plants that may have an issue, and hopefully that analysis, that iteration will be ready in the next couple of days. I will then take it to the Finance Minister and the Coal Minister, and we then shall work on enunciating a policy in the near future.
On the gas front though, lots of projects sitting idle due to unavailability. Any communication with the Oil Ministry or companies directly for gas supply?
Well, I am intending to engage with my senior colleague in the Petroleum Ministry on this issue. I certainly believe that the 10 gigs of capacity that today is stranded on the gas front needs to be activated in either of one of many ways. One is to ensure greater allocation of gas to these plants currently at the current prices. With the whole imbroglio of KG-D6 not producing, it's put a great amount of pressure on the gas-fired power plants in the power sector. The other option is really to use RLNG, imported RLNG, as a substitute for diesel peaking power. We are working on both fronts, and my dialogue is on with the Petroleum Ministry.
Mr. Scindia, coal freight rate hike, imported coal and pooling of price. Oil Ministry is considering doubling of gas prices. What role will it take on tariffs in the power sector? And are we now, or do you think the nation is prepared for a spike in power tariffs?
Well, tariff fixation is actually not the domain of the Ministry of Power. It is a very clear enunciation between the regulatory authority, which is the CRC and the SCRC, and the DISCOMs. So I would not be able to comment on this. Suffice to say that a regular tariff revision mechanism is something that would be healthy and in order. But I would stress more on the issue of actually cutting AT&C losses. Because if we are able to do that and make our distribution system much more efficient, ensure the viability of our DISCOMs, and then purchasing power on a long-term PPA basis, contracting close to about 90% of their peak load requirements, then the variability in pricing will certainly be ironed out.
And Mr. Scindia, finally, power companies are yet to sign FSAs with Coal India, especially state-run NTPC. How soon will the company come on board, and what about the rest of the sector inking the document?
Well, of the 60 gigs that we are supposed to sign, 21 gigs have already been signed. NTPC, with a capacity of close to 15 gigs, should clear all. There's only one pending issue. I've cleared all the other pending. There were about 7 or 8 pending issues. All of those have been cleared with the the coal ministry. There's only one pending issue with regard to the GCV of coal, 3100 versus 2200 being supplied. I hope that gets cleared up between these two entities and we're able to sign the FSAs for those 15 gigs in the next 2 weeks or so. And after that, I think you will see a slew of private companies also come in and sign the balance 20-25 gigs of FSAs as well.
Mr. Sindh, I really appreciate you taking the time out and joining us today on ET Now. Good to have you.